How to start crypto arbitrage trading for beginners. Hey guys, welcome back to the YouTube channel. Today we will be taking a look at what is crypto arbitrage and how you can get started with crypto arbitrage. So let's get into it. Now, we are going to undertake everything you need to know about crypto arbitrage, or some people may actually even call it spot futures arbitrage. And I'm going to be using Binance to show you guys just an example of how you're going to do that. So now the point of an arbitrage is to make sure that you're not taking risks. If you are doing spot trading or margin trading or even futures trading, you're taking a risk that you are going to lose your money. The point of the arbitrage is that you are not going to lose money, you're not going to take any risk, and what you're actually going to be doing is you're going to be buying a trade or buying a item in this spot market and then trading it in the futures market. So when you're going to be buying at this price over here, which is around $23,000. So if I buy BTC in the spot trade for 23,000 and I trade it for the futures, in the futures maybe I could trade it for 25,000 or 26,000, and that will yield me the profit without having to take any large marginal risk. So if you're looking to like going long or going short and buying and hoping that the price goes up and down in a certain way, you are taking a directional trade. So if I was to, do spot trading or do futures trading directly, I would definitely be making a directional trade. Let's say I want to sell or short my stocks, or crypto. Then I would be hoping that the price of crypto goes down. And that is going to be a high risk trade. But directional trading is going to always be high risk, but arbitrage enables you to sell at different markets to make a profit at the differentiation of prices in the market. So you're basically trying to make profit out of the the price disparities into markets. Now, there are crypto bots that will enable you to do this strategy, and you can do this on Binance P2P and as well as other crypto arbitrage platforms as well, where you can just buy in one market and sell it in another market. They have simplified this process. Platforms like rbsmart.com enable you to do arbitrage trading in a very simple way, but you definitely should take a look at your crypto graphs or spot trading graphs to have a better understanding of this. After you have some understanding, you can go ahead and move on to a crypto bot or to move on to direct arbitrage platforms that will enable you to do simple arbitrage trades. So first off, let's say I have BTC/USDT opened up over here. If in the spot market I buy it over here, then you're going to be using USTD. So I'm going to be using the fiat or the simple stable coin of USDT to purchase BTC. And let's say I go ahead and go in my trading section and go and buy USDT at a specific price. So if I go onto my margin trading, I would be going ahead and purchasing over here and making a directional trade of shorting maybe, and then you're going to have directional risk. But let's say that if we want to actually go ahead and start with the arbitrage trading. So what you're going to do is you're going to go ahead and borrow in the spot trade. So you're going to scroll down over here and have the margin to buy BTC. This is the borrow section. You're going to go into the normal section and go ahead and buy BTC at a certain amount. So you're also going to move the chances to 100%, and then you're going to enter the amount of BTC you want or the amount of USDT that you want. Now, after you have purchased the USDT, how do you go ahead and sell it in the futures market? So if you want to settle for if you want to cash out and you are owner of spot Bitcoin and you want to sell it in the futures, you need to hedge off your exposure so you can sell the exact same amount in the futures market. The reason why you go over to the futures market is because you can't sell something that you already have or don't have, because that would be a directional trade. So your net position is theoretically always going to be zero for this cash and carry trade, and that is why you do arbitrage, and the arbitrage comes from something called future funding from traders. Now, this happens when the funding rate is something that is given to you by the investors or the people investing in the future. And this one way of trade will pay this funding, and now funding is something that happens specifically with crypto futures as well as something that is super important in the futures platform. Now, the supply and demand needs to be in the right space so that the futures contract price for Bitcoin matches the underlying price that it currently is in the spot market. So if I go ahead and you take a look at the spot market, or if I just go ahead in my derivatives and I go into my trade, I go into the spot trades. Now you can see this is the spot trading price of Bitcoin right now. If I go into the derivatives and I go into the USDTM futures, you're going to open up the exact same thing, which is going to be BTC, the same coin. And now you can see the price of BTC in your futures as well. It's super essential that the underlying price is pretty similar. Now, it won't be exactly the same, but you need to make sure that it's pretty similar, because if the price difference is too large, then you're not going to be able to sell in the futures market, because it won't give you a theoretical zero position. Now, just to continue, so if you're in the spot market, you're going to buy a certain amount of crypto, and then you're going to take the exact same money, and then you're going to be selling that exact same amount of BTC in the futures market, and then you will be making a profit. How is the profit going to incur? You're going to be receiving funding from investors, so which is usually 10 times or 15 times the amount of money that you have invested. So you can do this on Binance, and it's very simple on Binance, but for some people the overall system might feel a bit confusing. So you can also go on Pionex, which will enable you to create your own trading bot, and you can click on Pionex and create your account, and click on Spot Futures Arbitrage Bot and click on Create over here. And then you're just going to click on Bind, and then you're just going to continue on over here and install your authenticator, verify your identification to get started with your bot setup. And then you're just going to go into your Gmail. So just like that, you're just going to continue on ahead, and then you're just going to paste. Now from here, what you're just going to do, once you have verified your account on Pionex, you're going to click on Spot Futures Arbitrage Bot, you're going to click on Verify, and then you're just going to enter some of your personal information, and then we're going to get started with the bot. So now you can see over here, we're just going to continue on with our bot over here, and you can just click on create, and then you're going to choose your coin. So we're going to be choosing BTC. Then you're going to add the amount of investment you want. So you're just going to add your investment, and then you can add a leverage. Now, whatever amount of money that you have, you're going to add the investment, a minimum. You have a required of 300 USDT. Below that, you also have a leverage. Now, what is leverage in this, and what does this trading bot basically do? Instead of having to manually, buy BTC on the spot market and then sell it on the futures market like I would on Binance, you can just add the amount of money, and this will automatically do the entire thing for you. But if you add leverage, that means you're introducing risk into your arbitrage, and that is totally up to you. And if you want to, you can add a risk to this as well, but the entire purpose is usually to have risk-free investments. And you can also go in the manual mode and add the amount of BTC and balance, and then go onto your market and choose how much you want to buy and set a grid buy limit as well. So that is how simple and easy it is to set up your own crypto arbitrage, and I hope you guys found this video helpful and you're now better able to understand crypto arbitrages. Now, if you're able to get started with the bot, then you can slowly move on to doing it manually as well. And that will actually enable you to get the most amount of gains. But with crypto bots such as the Spot Futures Arbitrage bot, you're also going to be able to get a 15 to 10% return on your investment without having to, manage any kind of risk. So that was it for today. I hope you guys found this video helpful. Make sure to leave a like and subscribe to the YouTube channel, and I will catch you guys in the next video.